The window for early institutional positioning on the next phase of market structure is closing. Now, while many are focused on what you might call surface-level noise, the official data on this integration, it's already been released. So in this analysis, we're going to break down that official timeline.
And this isn't just speculation. This is a direct statement from Paul Atkins, a former U.S. SEC commissioner. A quote like this signals a pretty fundamental realignment in regulatory thinking. This is really the official green light that institutions have been waiting on.
So our whole purpose here is to provide clarity. We're going to be mapping out the timeline based on actual institutional reports and direct regulatory statements so you can really understand the current market positioning right alongside the major financial players.
All right, so let's start with the most critical component, which is, of course, the regulatory framework. And this isn't some minor adjustment. What you're seeing here is a foundational policy shift happening right now within the United States Securities and Exchange Commission.
Now, what's really striking here is the language. Commissioner Atkins explicitly stated the era of the SEC standing athwart innovation is over. I mean, this is a complete reversal. The posture is no longer adversarial. It's now a race to catch up with global market structure development. And you have to understand that U-turn, that is the primary signal for institutional capital.
Institutional updates move fast. So subscribe and hit the bell to make sure you're getting this research before the market has a chance to react.
Okay, moving to our second point, and we can see how this all builds. With those regulatory headwinds clearing up, institutions are now building the core infrastructure, what you might call the liquidity engine for this new market.
And just to understand the scale we're talking about, look at this number. This is LMAX, just a single institutional exchange, and it's already processing over $8 trillion in volume. Now, they are actively integrating the assets required for this new tokenized environment. So this isn't some future prediction. The capital is already in motion.
So here's the crucial point, the core technical problem these institutions are all facing. They've built these private, siloed ledgers like JPM Coin, but the systems are totally isolated. To get to true atomic settlement, that is the instantaneous exchange of one asset for another with zero settlement risk, they absolutely require what's known as a neutral bridge asset to connect all these separate systems.
And this just illustrates the issue perfectly. This isn't some outside opinion. This comes from internal analysis by financial giants like Citi and JP Morgan. They're openly admitting their private bank coins just aren't sufficient on their own. The market itself is defining the need for this very specific bridging technology.
Now, this obviously raises a key question. Where exactly is this information coming from? And how can you review the source documents for yourself? Well, video editing takes time, but the market doesn't wait. For immediate updates and breaking news the moment it happens, you can join the Telegram newsfeed. I post the raw institutional reports there right as they're released. The QR code for those real-time alerts is right there on your screen. This brings us to our third and final point, the commercial catalyst. This is what connects the regulatory shift and the infrastructure build-out to a specific, time-bound event that really anchors the entire strategy.
So just look at this roadmap. Step 1 was achieving regulatory clarity, which, as we've just seen, happened with the SEC's policy shift. Step 2 is fostering ecosystem development. You see that with programs like UC Berkeley's UDAX Accelerator, which is building startups specifically for this ledger technology. And then Step 3 is the commercial launch target, a 2026 IPO. These are not random events. This is a sequenced plan.
So, why is this timing so significant? Well, it's because the traditional 4-year market cycle is aligning perfectly with this new regulatory clarity. And this positions that 2026 IPO not just as a simple corporate event, but as a major inflection point for large-scale institutional allocation into this new market structure. Which, of course, leaves us with the most critical question for any investor. What do the valuation models for this upcoming public offering reveal about the future price discovery of the underlying digital assets that actually power its infrastructure?
I analyzed those valuation models for the upcoming IPO and what it means for the associated assets in this video, right here. You'll want to see these models before the opening bell.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.